Hello, wise investors, and welcome back to the Dividend Uncle channel, where I share with you strategic insights on how to grow your wealth and income with dividend investing. In today's episode, I'm going to talk about one of the most popular and controversial REITs in Singapore, Mapletree Pan-Asia Commercial Trust, or MPACT for short. Mapletree Pan-Asia Commercial Trust is a mega REIT that was formed by the merger of two Mapletree REITs, Mapletree Commercial Trust and Mapletree North Asia Commercial Trust, in 2022. Mapletree Pan-Asia Commercial Trust share price has fallen by almost 40% since its peak in 2021, and its DPU has declined by about 8% year-on-year in Q3 2023. Many investors are still unhappy about the merger, and have been wondering if the REIT will ever recover from its slump and resume its growth trajectory. In this video, I'm going to share with you my views on Mapletree Pan-Asia Commercial Trust, and I will share what the Dividend Uncle intends to do for my holdings in this REIT. Before I start, I wanted to take the opportunity to introduce my collaboration with Webull. If you are thinking of setting up a low-cost brokerage account, go for Webull for easy-to-get freebies. Use my exclusive link in the description section, and you'll get to win 10 free shares, worth up to $5,000. Just fund your account for 30 days, any amount. Additionally, there's also a Moneyball promotion where you can earn up to $2,000 by funding more. Lastly, Webull recently launched their very first shares transfer deal. More details can be found in the description. My wife has already signed up. Okay, without further ado, let's get started. Mapletree Pan-Asia Commercial Trust and its Q3 2023 performance. It has a diversified portfolio of 18 commercial properties across 5 key gateway markets of Asia, namely Singapore, Hong Kong, China, Japan, and South Korea. It has a market capitalization of about 7.5 billion Singapore dollars and a dividend yield of about 6.6%. However, Mapletree Pan-Asia Commercial Trust has been facing some challenges in recent times, especially in its Hong Kong and China markets, which have been affected by the COVID-19 pandemic, social unrest, and geopolitical tensions. For Q3 2023, it reported a 10.1% increase in gross revenue to 240.2 million Singapore dollars, mainly due to the contribution from the overseas properties acquired through the merger. However, its net property income only grew by 8.7% to 183.2 million Singapore dollars, as its property utility expenses surged by 106%. Its DPU fell by 8.2% to 2.24 cents, as its net finance costs increased by 37.5% to 57.6 million Singapore dollars, due to higher borrowings and interest rates. Its DPU also suffered from a weaker Hong Kong dollar and Chinese yuan against the Singapore dollar, as well as an enlarged unit base after the merger. Mapletree Pan-Asia Commercial Trust's portfolio occupancy improved slightly to 95.8%, with positive rental reversions of 3.2% across its portfolio. However, its Hong Kong and China properties continued to face headwinds, as Festival Walk recorded a negative rental reversion of 9.5%. On the other hand, its Singapore and Japan properties performed well, as Vivo City achieved a high occupancy of 100% and a positive rental reversion of 14.2%. Mapletree Pan-Asia Commercial Trust's balance sheet remained healthy, with an aggregate leverage ratio of 40.7%, and an interest coverage ratio of 3.0 times, which are not too shabby. Its debt maturity profile is well staggered, and also well hedged, with about 80% of its borrowings on fixed rates, and 92% of its expected net income hedged to Singapore dollar for FY24. However, its average cost of debt increased substantially from 2.44% to 3.34%. Mapletree Pan-Asia Commercial Trust also has the potential to unlock value from its existing portfolio, through asset enhancement initiatives, or AIs, and redevelopment opportunities. It has completed AIs for 3 of its properties, namely Vivo City, Mapletree Anson, and Festival Walk, which have improved their attractiveness and competitiveness. Mapletree Pan-Asia Commercial Trust is also planning to redevelop its M Tower property in Singapore, with a higher plot ratio subject to regulatory approval. This redevelopment is expected to increase the gross floor area of the property by about 50%, and enhance its value and income. The Dividend Uncle's personal take on MPACT. So, will Mapletree Pan-Asia Commercial Trust ever recover? My answer is yes, but it will take some time and patience. It is a quality REIT with a diversified portfolio, a strong sponsor, and a growth potential. Its valuation is also undemanding, with price to net asset value ratio of 0.79 times, and a dividend yield of 6.6%. These metrics are historical records, with the price to net asset value ratio at its lowest in 5 years, and the dividend yield at its highest in 5 years. However, it is facing some challenges in its Hong Kong and China markets, which have dampened its performance and sentiment. Its share price and DPU may remain under pressure in the near term, until the situation in these markets improves and its merger synergies are realized. Therefore, I will be holding on to my shares in Mapletree Pan Asia Commercial Trust for now, and as a long-term investor, I may buy on further dips. In the realm of finance, numbers aren't just data points, they tell a story. Mapletree Pan Asia Commercial Trust's journey isn't a linear tale of ascent or descent, it's a strategic narrative. If this synthesis has sparked insights or resonated with your investment philosophy, show your support with a thumbs up, share it with fellow investors. As always, please remember to subscribe to my channel. About 70% of my viewers are not yet subscribers, but I am confident we can do much better than that. Remember, your financial journey is as unique as you are. Until our next exploration, happy investing.